What is up, traders? What's up, tycoons? Super excited for today's video. Earnings season is here, and man, this is going to be the biggest week in earnings. We've got 5 of the Magnificent 7 stocks all reporting earnings today. We've got Boeing reporting earnings. I'm sure that's going to be one of the funnest earnings calls for that company ever, right? Joking, right? Obviously, we know that there's been some serious concerns. We've got important companies like MasterCard on there. We've got Starbucks, UPS, Pfizer, not just big tech. And then Friday, we're going to have some big energy ones. We're going to have ExxonMobil. We're going to have Chevron. Oil prices have been ripping lately, and it's possible we could see those continue to go higher with the escalations in the Red Sea. And even now, 3 U.S. troops were killed. Obviously, lots of tensions going on across the world globally, and U.S. has been getting more and more involved. So we'll see how things continue to escalate. We'll take a look at Meta in today's video and just go over where I think the stock can go on earnings and where potentially it can go, throughout the rest of the year as well. And we've got to talk about the QRA. Now, I just talked about the QRA recently in a video, but in case you missed that one, it's super important, guys, and you really need to know about it, which is why I'm bringing it up again. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance content and free trade ideas. And these are what the trade ideas will look like, right? We'll highlight whatever it is that we're looking at, whether it's moving averages, whether it's an RSI, a MACD, whether it's a trend line, key levels, different things like that, and identify high quality setups. You don't have to worry about me spamming your inbox with 10 different trade ideas, and just blowing up your email inbox, trying to brag about 1 or 2 that worked. You can actually go back and review the website, okay, and take a look at some of the previous newsletters that went out because it's in a blog format as well. And you can see that many of those trade ideas have worked very well. Now, RTX was one of the most recent ones, and RTX has been absolutely ripping ever since the newsletter came out back in December 28th. You can see even people in the Discord are mentioning and saying, how much up their positions are in RTX. And if you want to get into the Discord right now, it's only $1 using promo code JAN24, but that promo code expires at the end of January. We really just did that to celebrate the new year, really kick things off strong with you guys and try to get as many people in for, the cheapest price possible. You can see some different profit screenshots, from different people in the Discord, and lots of people are making money in there. So join now while you can for $1. That's where you'll get over 20 different analysis and trade ideas every single week in there, as well as intraday updates for any things that I'm day trading and day trading opportunities, as well as other valuable resources and indicators such as being able to see dark pool levels, gamma levels, and many other things. Now, let's get into the video here. And over the past week, U.S. large cap equity ETFs outflows reached nearly $3 billion. Investors pulled money out of small caps as well and shifted into bonds. Now, investment grade took in almost nearly $1.7 billion. Those are investment grade bonds. And so what you're seeing here is large cap. Now, what are the large cap stocks, right? That's mostly your big tech, okay? Mostly big tech, names like Microsoft, Apple. Those are some of the biggest large cap stocks in the market, and we saw lots of outflows in those large cap stocks. And is that a sign that things are going to shift? Remember February, and as soon as we come into February, I'm going to drop a good video on it with some data, but February historically hasn't been the best month for tech, right? It's usually one of the most bearish months in the year. Now, if you look at hedge funds versus tech, now this is excluding the Magnificent 7, the hedge fund long short exposure to tech is currently at 4-year lows. So we're seeing that, not only are we seeing large amounts of outflows from the big tech, right, and large cap equities, but we're also seeing that hedge funds aren't putting that money into the other 493 stocks. Okay, and in other big tech stocks, right? And so, could all of this be a warning sign that, hey, we're about to get a correction in the market? Do I think it means we're about to enter a bear market? No, but can we pull back, and do we have, room to pull back? I certainly do think so. Now, this is another good chart. If you look at market cap versus performance, on the left side of this chart, you're basically going to have the largest market cap companies, and on the right side, you're going to have the smallest market cap companies. And so maybe just one reason in particular that you're seeing lots of outflows from those large cap companies is because they've done so well and they've been performing so well. Maybe it's just that simple, right? Maybe it's a lot of profit taking and, people just want to, get a little bit of cash, and then we're seeing large inflows into bonds. And so maybe they're taking profits on those and putting some of that money into bonds. Now, that may not be what's happening, but that's what some of the data may be suggesting. And that's kind of how I'm interpreting it a little bit. Now, earnings, all right, is very important. As I mentioned, we've got 5 of the Magnificent 7 stocks reporting earnings. If you look at Q4 EPS revisions, outside of the Magnificent 7, S&P earnings revisions have been firmly negative. So you've got the Magnificent 7 here up positive 4%, and then you've got the S&P as a whole is down 11%, and then the S&P 493, so excluding those Magnificent 7, EPS revisions are negative 15%. So, it doesn't look great from an earnings standpoint. Will we maybe perhaps get some surprises? And get some good surprises? Who knows? But whoever is looking at these things and doing these earnings per share revisions, it doesn't have good outlook, and they've been firmly negative, as I mentioned. Now, when you dive into earnings seasons, the companies reporting earnings that are 5.3% below, or companies are reporting earnings that are 5.3% below the estimates, which is below the 5-year average of 8.5%, above estimates, and below the 10-year average of 6.7% above estimates. And a large reason of that was because of financials. Okay, let's just call it what it is. Financials negative 24.5% here is really dragging things down. The only other negative ones are going to be communication services. Okay, this right here is the S&P 500 as a whole. So while the earnings surprise percentage hasn't been tremendous, okay, you see industrials, energy, and information technology actually leading the way right here. Because financials were just so bad, that is what put the S&P 500 at that negative 5.3% below estimates. Okay, so excluding financials, it really doesn't look that bad. And we're seeing, industrials is something that you guys may want to start paying a little more attention to. We've got some industrial stocks with earnings this week as well. But meanwhile, we have short interest in the Magnificent 7 rising. Okay, so not only are we seeing outflows from those large tech companies, large big cap companies, but short interest in the Magnificent 7 is actually rising, as indicated by this Bank of America chart right here. And we see a strong uptick into it. Now, these are going to be all of the most anticipated earnings releases. Apple, Amazon, right? We've got AMD. SoFi is really nice. I'm very interested in SoFi. MSCI will be interesting. Starbucks. There's going to be a lot of interesting ones. We've got some healthcare names in here too. We've got Pfizer, HCA. So it's going to be a roller coaster, guys. Merck is in here too. Royal Caribbean will be really interesting. Carnival Cruise Line CEO has been just extremely bullish. We'll see what Royal Caribbean ends up saying, what their company has to say as well. But let's take a look at Meta. Okay, so Meta is going to be reporting Thursday after close, along with Amazon and Apple. So be prepared for a very volatile open on Friday with 3 of the Mag 7 stocks all reporting earnings after market close on Thursday. Friday is going to be a big move at the open in my prediction. Now, this is our weekly time frame. We had a very nice cup and handle here on Meta, and in a perfect world scenario, what you do is you take the measurement of the cup, right, and you put that on the top of the base of the cup, okay, and that projection is going to be your expected move. Now, being that this is a weekly time frame chart, this isn't something that's going to happen in a very quick amount of time. We only recently broke out of this, for about 2 months, maybe, around 2 months, close to 8 weeks, something like that. So, it's going to take a lot of work, but if that does happen, this could potentially take Meta up to 560 to 580. Now, if we look at what's happening right now, does it look a little bit overextended and due for some type of correction? Yes, it does, right? These are mathematically parallel lines right here, okay? And you can see that we tagged this here 1, 2, 3, 4 times, pulled back, 5 times, pulled back, And now after this huge extensive rally that we've had, we come up here and we tag the top of the channel, and we also hit one of our bullish price targets here of 394.33. And you can see we actually closed just below that. So, when it's in price discovery range right here, I like to use the fibs a lot to give me some price targets. And we came up to that 1.272 extension at this level. And, that is acting as a resistance a little bit because we're closing there. We didn't necessarily break out above it. And we're also tagging the top of this trend line. So do I think Meta is due for a pullback? Yes. Can it pull back all the way back to 350 and still be bullish? Yes, it can. It can really even pull back all the way to 330, 325 and still be bullish, and basically we get a breakout retest of the base of the cup now, all right? And then we get a continued push up. If we were to break below 320, all right, then this would be considered a false breakout potentially and a look above and fail, and it could signify that Meta is starting to roll over. Now, of course, earnings is very typical that you see large gaps up, large gaps down. So, we could completely break out of this bullish channel and open up above 400, above 416. That's very, very possible. And we could gap down below 350 as well. Anything is possible with earnings season. So, technicals aren't too much of a factor when it comes to earnings. Yeah, the chart can look good, but, it all matters about what comes out in the report and what comes out in the guidance, moving forward. That's often how the markets anticipate and really look at everything. All right, and so that's basically my thoughts on Meta. Can we start to see a pullback in tech? It seems like big money is thinking so. Don't forget to join the Discord while you can for just $1. All right, DraftKings, remember, this is actually one of the ones that we talked about in the Discord every February. It's been green, NFL playoffs, the Super Bowl, lots of sports betting going on. It's been green 100% of the time, okay? And just recently, back in January 13th, we were talking about the falling wedge on the Discord. I had an ABCDE setup there. The E wave was 100% or a 50% retracement of the wave D. It's very, very textbook. Doesn't get any more textbook than that. And you can see the stock broke out over 21% afterwards, right into overhead supply. In the Discord, you'll get access to over 20 different swing trade ideas, every single week in there. You get access to the intraday commentary, the intraday updates on things that I'm looking at for day trades, all right, as well as many other things, okay? Now, that's only $1 right now. That promo code JAN24 ends at the end of January. And if you don't want to pay for anything, just sign up for the newsletter. Newsletter is completely free. Hopefully you guys sign up for both. I think that they are a great value, and that's all I'm really looking to do is provide value to you guys. Check out the website for the newsletter, right? You don't have to, you can check out the website and, review some of them before you sign up, okay? And actually take a look. It's like, all right, is this something that I actually want coming to my inbox, before I sign up for it? That's something that you guys can decide. And if you ever want to do a coaching session, right? And maybe you like some of the analysis that I do, the technical analysis, or you want to go over day trading dynamics or some of my swing trading strategies. Ko-Fi is the place to reach out to me, okay? There's a link in the description for the Ko-Fi page. You can click on commissions and book a 30-minute or a 1-hour session via the Ko-Fi page. Thanks for watching, and I'll see you in the next one.